All right. So let's go look at back at number one real quickly, even though we worked this one already. So what we said is, so the question is, what's the occupancy rate for Shady Palms Hotel? 100 rooms, February, not leap year, which means February had 28 days, so 2,800 rooms available. We had 500 guests that stayed for 5 nights, which is 2,500. We had 10 guests that stayed for 2 nights, so we had a total occupancy of 2,520 rooms. If we divide that by the total number of rooms that could have been occupied, 2,520 divided by 2,800, we get a 90% occupancy rate. So if we click it, that's correct. So that's how we calculate the occupancy rate, what rate we were occupied for the month. Number two, we had 300 rooms, and it's March. Everybody knows that March has 31 days. So 300 times 31 is 9,300 rooms. Says we had 7,440 guests. They only stayed a single night. So we had 7,440 rentals out of a total of 9,300 possible. So that's an 80% occupancy rate. Okay, 80%. Good. All right, number three. All right, so economic, what? All right, so some kind of statistical thing, 80%. Whatever that means. All right, what's next? Here's another one. Hotel industry occupancy rate is the measurement of utilization, how much the hotel is being utilized. All right, so then let's see what this one says. Cost of goods sold for a Michaels manufacturing in the current year was $233,000. Finished goods was, at the beginning of the month, was that December ending finished goods, so the cost of goods manufactured. So in order to answer this question, we have to know those formulas. Okay, so remember the formulas. So the formula for cost of goods manufactured, I shouldn't have erased it. So it was beginning work in process plus all our cost minus ending work in process equals cost of goods manufactured. So we have, it says the total cost of goods sold.
Would you not use the formula for cost of goods sold?
Exactly. Just figured that out. So my cost of goods sold for the month is $233,000. That's the bottom. So I need to back into, so it says the finished goods inventory balance at the beginning of the month was 31,600. And the finished goods at the end of the month was 24,200. So what I'm after is total cost of goods manufactured. I just have to back into that. Okay. So if I take the 233,000 plus the 24,200, which is my minus, and then subtract the beginning, 31,600, I get 225,600. Does that sound right? So I just backed into it. And of course, I can check myself. 31,600 plus 225,600 minus 24,200 equals 233,000. Okay. So just by knowing the formula, I can calculate the cost of goods manufactured. Okay, good. All right, next. Company sells goods for 150. The cost is 54,000. Which of the following statements is true? All right, so if we sold goods for $150,000 and the cost of those goods was 54,000, I don't like questions like this. Of course, the first option, we're not going to recognize sales on the balance sheet, right? Why? What goes on the balance sheet? Liabilities and owner's equity. Where do sales go? It's a revenue account, so it goes on the income statement. So that was obviously not correct. Number two, the company will recognize $96,000 in gross profit. What's the gross profit on this? 96,000. What's the formula for gross profit? Sales minus cost of goods sold equals gross profit. And so you got to know that you're an accounting student. Sales minus cost of goods sold equals gross profit. But what does it say? We'll recognize the 96,000 gross profit on the balance sheet. Where's the gross profit? On the income statement, not on the balance sheet. Okay, so that was not correct. 96,000 is the gross profit, but the gross profit don't go on the balance sheet, so that was not correct. The company will decrease finished goods by $54,000. Now there you go. Okay, so what's the formula for cost of goods sold? A decrease in finished goods, right? So that's true. Okay, so what is cost of goods sold? It is the goods that we sold. So our finished goods inventory went down 54,000 in order to make $54,000 worth of cost of goods sold. Make sense? What's the journal entry? Let's talk about that. So in our 3 locations, let's talk about journal entries.
Wait, how would it be able to play? So they're saying we. Okay, never mind.
Okay,
Well, you would credit revenue for sales
right.
and debit for each goods.
Either cash or accounts receivable in order to record the sale. But then, assuming a perpetual inventory system, right? So what's the journal entries here? So when I'm moving material, when I'm moving goods through this system, what's my journal entries? So I buy materials, right? So I'm going to purchase materials. So I'm going to debit an account called materials every time I buy, right? And credit cash or accounts payable, right? To buy materials. I'm going to debit materials because it's an inventory account. So it gets increased by debit. As the materials flow into the factory, what's my journal entry? Debit work in process, credit materials, right? Okay, to move the materials from the storeroom into the factory. Debit work in process, credit materials. To record labor, what am I going to do? Debit work in process, credit cash or wages payable or something, right? To record the payroll. To record my factory overhead. Debit work in process, credit factory overhead. That's my journal entry, okay? As I'm moving into the warehouse, debit finished goods, credit work in process. Does that make sense? Because you're debiting one, it's coming into here, out of there. So we have to move the cost into the correct account. When they get sold, what's the journal entry? Debit, cost of goods sold, credit finished goods, right? That's the journal entry. Okay, so you debit to the right, credit to the left. Make sense? Okay, so what's the question here? It says the company will decrease finished goods by $54,000. So if we sold stuff that cost us $150,000, what's the journal entry to record that? Debit accounts receivable, credit sales for $150,000. The fact that the inventory has now been sold for a manufacturer, debit cost of goods sold, credit finished goods for $54,000. So that's why C is correct. Good? Okay.
So like. You sell goods in 150K,
Mm-hmm.
the cost to make that is 54K.
Mm-hmm.
So. Is it saying like you just decrease 150K by 54K or?
No, so you sold goods for $150,000. That's your sales price.
Yeah,
Those goods cost you $54,000. Okay, that was the cost of goods sold.
yeah,
Okay, so your gross profit is $96,000
okay, yeah,
on that sale. So, but they're talking about, because we're learning the flow of cost in manufacturing, they're talking about the journal entry to move the cost from finished goods to cost of goods sold.
to move, how much it is to move it,
No, what's the journal entry to move it?
okay,
And what we decide, see, this is an inventory account. This is an inventory account. This is an inventory account.
Yeah.
We discussed that in the PowerPoint. And then this is an expense account. They're all debits because the inventory accounts are assets. This is an expense account. So they're all debits. So as we move from materials to work in process, we debit work in process, credit materials. As we move from work in process to finished goods, we debit finished goods, we credit work in process. When they get sold, the journal entry is debit cost of goods, credit finished goods.
Okay. So
Good.
that- yeah, so it's just saying it took 54,000 to do that, and that's why it's a decrease.
Right, you're decreasing finished goods, increasing cost of goods sold.
Okay, got it.
That's your journal entry. Good,
Thank you.
you're welcome. What do you think, Tay? Can you teach this class yet? You know, I ain't getting any younger. All right, let's see, which of the following is reported on the income statement of a manufacturing company? Of course, unfortunately, it's going to give us the answer. Why is that true? What type of,
I guess because it's an income statement, I mean, I figured because it's an income statement, the cost of your goods sold would be on there for your.
what type of account is cost of goods sold is the question.
Oh,
What is it? What's cost of goods sold? What type of account? Don't everybody answer at once. That's rude. It's an expense account, right? It's using up of your inventory. Anytime an asset got used up, it's a what? It's an expense. So cost of goods sold is an expense. So the question is, which one goes on the income statement? The expense account. What are the other three? They're all inventories. Materials, work in process, and finished goods are all inventory accounts. They're not expense accounts. So they go on the what?
they'll just go on, I mean,
The balance sheet, right?
yeah,
Yeah, they're inventory, okay?
but this will be on an income statement, because that's how,
Because it's an expense.
yeah, it's an expense of your.
Good. Okay? Starting to click. I love this stuff. Do you love this stuff?
As long as it's logical.
It is logical. Is it not? Is it not logical? Well, I know, any word problems are difficult. You know, it's difficult for humans to do, but we got to do it. And we're problem solvers. You're being trained as a problem solver. So we'll get there, right? Right, T? All right, let's see. Work in process increased by 20,000 during the current year. Cost of goods sold or cost of goods manufactured was 180. The manufacturing cost incurred in R. Work in process increased. Cost of goods manufactured was one. Okay. So what we're after, so we got the same formula.
Which formula do we use?
That's a good question. Which one? The cost of goods manufactured, right?
Yeah.
Okay, so it says cost of goods manufactured is 275,000. Right? And it says that the work in process inventory at the beginning of the current year is $44,000.
Where you get?
Wait a minute.
Oh, am I wrong?
You had the
You
one.
said 275,000, like, whoa.
Am I on that question there?
The one at the main top.
Main top.
We're past it.
Okay, main top. All right, so cost of goods manufactured is 180. Work in process increased by 20,000. Okay, so we don't know what the beginning and the ending was, but we just know that it increased. So we can plug in any number, right? So we can say that the beginning is 0 and the ending is 20. That's an increase of $20,000, right? So it'll work. Okay. And then, so what's the question? It says cost of goods manufactured was 180. So what's the manufacturing cost? So we're just looking for this number.
Yeah.
Which would be what? What minus 20,000 equals 180?
166. I'm 200.
Right?
You said minus? Yeah. He said what minus 180? Oh, you're saying add it together. Okay, perfect. I already put 200 down, so it's great.
But why? Can you explain?
I just figured because the cost of cost of manufacturing all the goods together. And like you said, you can just assume it was zero. All you have to do there is just add 20 to 180. And that would be your total cost of manufacturing for incurred.
Right. So what they want to get us used to using the formulas, understanding the formula, making sure this is kinesthetic learning. We memorize the formula and now we put it into action and we see why it works. Beginning inventory plus beginning work in process plus cost of manufacture minus ending inventory equals cost of goods.
Yeah, here you just skipped all that, and now you just have in the inventory, how much inventory is and cost of goods manufacturing. You just add those together.
Well, you're trying to find the missing variable.
Yeah.
Yeah. So in this case, yeah, you add those two together. Okay. Yeah. Okay. So let's look at this one. Work in process at December is 42,000.
So that's our ending.
Yep. Work in process decreased by 40%. So we got to figure out the beginning. Okay. So what plus 40%, 42 plus 40% is what? So 42,000 times 1.4, is that right? No, you'd have to divide it by 60%. Divided by
70.
yeah, 70,000 would be our beginning. Right?
Yeah.
So if it reduced by 40%, that would make it 60%. So that means our ending must be 42. So we backed into the beginning.
They used to do 42 times point
Well, I divided it by 0.6.
26.
Mhm.
Okay. So you don't have to,
Yes. Okay. And don't you love word problems? I love them. All right. So work in process decreased by 40. The total manufacturing cost incurred, which is our direct labor, direct materials, and factory overhead, is $260,000. What is our cost of goods manufactured? So 330 minus 42 is what? 288.
So each one of these, just making you solve for something different.
Yep. It's just making sure that you understand the formula. Okay, questions on that one? Another? Work in process at the end of the year is 44,000. Work in process increased by 60. So if I divide that by 1.6, right? I'm getting must be 27.5. If it increased by 60%. Right? See, cost of goods manufactured is 275,000. Total manufacturing costs incurred or what? So 275 plus 44 minus 27.5. 291.5.
So what do you take the 44,000 and you divide it by 1.4?
To get the beginning, no, I divide it by 1.6 because it says it increased by 60%.
but if you
Divided
did,
by 1.6.
you did 44,000 divided by 26,
Multiply.
and you got
27.5
If you multiply it by it,
divided it.
I don't know why in my head I'm thinking of it as 275,000 for some reason. But yeah, you just add those two together and you get 60 something, over 60, 70 something, and then you add it. You get 291.
What do you think? Are you loving it?
I mean, it's simple as long as you have the equation.
Right, exactly. So that's the thing. You got to memorize the equations. but they make sense. So they're pretty easy to memorize.
Yeah, PowerPoint. Fine.
But you're going to get them in your head because
No,
it's
that's what I'm saying, if the equations are on the PowerPoint, and I mean, it's just like calculus. If you have the equation, you're good from there, all you gotta do is plug it in. But if
Right.
you don't know any of the.
well, but
equations,
the thing is, you're not always you're gonna get the formula in your head. So just make the formula make sense. If you remember the whys, you can rebuild the whats. So if you remember why the formula is what it is, it's easy to rebuild it. So, when I wrote this down, I wrote it down out of my head because I know it's the location, the beginning inventory, plus all the inputs. What are the inputs? Direct labor, direct materials, and factory overhead. That's my manufacturing cost. Subtract the ending inventory, and that equals my output, which is cost of goods manufactured. So I know the why, so I can rebuild the formula at any time. I don't have to be able to look back at the PowerPoint. Okay, so I can rebuild the formula anytime out of my head. Okay, same thing this formula. It's the same. Beginning finished goods plus the input minus the ending finished goods equals cost of goods sold, the output. So if you know the rules and can rebuild the whats from the whys, then you don't have to memorize.
Just imagine like that equation, because basically everything would be in commas, like I forgot what they're called. But you have commas here and then a plus, and commas plus, and that's how you get the cost of goods equation at the end. I would have to write it out, I can't.
Yeah, you need to write this out
And if I had to write it on a math equation, it looked like a really big math equation, but with you, when you have it on the board, it looks way simpler.
okay, good. So don't memorize the formulas, understand it so that you can rebuild it. Right, Stephen? All right, let's see, where am I? Let's see, got time for one more maybe.
Oh.
We're on the top one?
Yeah.
That's not the one we just did? Okay,
Yeah,
all right, let's see. So cost of goods manufactured during the year is 240. Cost of goods manufactured. Work in process at December is 50,000. So we know that's the ending. Work in process during the year decreased by 60,000. Okay, so if it decreased by 60, this is 40% of that, right? So if I divide it by 0.40,
Yeah.
that'll give me
125. 125,000.
and then you should just.
25,000. So then I know that I'm after my total manufacturing cost, right?
So then you just subtract that from 240.
Total manufacturing cost are. So 290 minus 125 is 165.
Yes. Start that.
Good. Good. See, accounting's fun. I mean, where else can you get such kudos, right? We make shit balance. We solve problems. We get answers. Yeah, I love it. And if we learn enough about this stuff, we can be heroes and heroines. Well, no, wait, that's a drug. Okay. So if you work in a factory and you know all this stuff, then you can literally save a company a fortune because you understand cost. You can find inefficiencies. That's why we study all this stuff. We're just at the beginning. So by the time we finish, we'll be able to analyze variances and find inefficiencies. We're just we're just starting this adventure. We're going where no man has gone before. No, well, I guess other people have done it, right? Last semester we did it. Okay. Anyway. All right. So I'm going to stop this. I don't know about you guys, but I'm excited. I'm hungry too. I haven't had that yet. Let's see. Stop recording. Okay, good.